Hello and welcome back to my 10 favorite people. Hope you're doing well. What an insane start to the week for Bitcoin, teleporting from about $51,000 to just over $57,000 this morning. And it's now testing its 786 Fibonacci retracement, something I was definitely not expecting until after the halving, because this is in fact the first time in Bitcoin's history that it's tested the 786 Fibonacci retracement before the halving. And of course, this gives us very clear evidence that the halving is being front run. We are seeing this rally get a lot more aggressive a lot earlier in the cycle, maybe because it's Bitcoin's fourth halving cycle and investors are more familiar with the narrative and are not waiting until after the halving to deploy aggressively and are instead doing it before the halving. And of course, the ETF excitement and the recent inflows are only adding fuel to that fire. And what was especially impressive about the inflows yesterday was that they occurred on a day that the S&P 500 was red. So even on a day the S&P 500 was red, we still saw almost $520 million flow into these new Bitcoin ETFs. And we saw a record low outflow day for Grayscale at just 22 million. And of course, when you combine very, very strong inflows with a breakout in price, you get a strong rally. And it's a little bit bittersweet because I would have loved to see Bitcoin consolidate longer before this break upwards, because we're now seeing those consolidations get shorter and shorter, and we have definitely entered a parabolic phase. And the thing about parabolas is it's almost impossible to guess where they're going to top. But when they do break pretty aggressively, and we've now entered a very aggressive upward move. And I think the move would have gone a lot higher if we saw a longer reaccumulation phase instead of the short one that we had over here and over here, which of course was probably due to the fact that we kept seeing these strong ETF inflows. We ended up seeing a record volume day for BlackRock yesterday. The ETFs have also officially crossed the 300,000 BTC mark, and they are now holding over $6 billion worth of Bitcoin, which is pretty insane if you think about how much Bitcoin that is in only 1 month of them existing. And of course, people were aggressively shorting this rally all the way up, and there ended up being about $300 million in short liquidations, which just added to the short squeeze and added to how aggressive the move ended up being as these shorts kept piling in during the rally. Now, there are definitely still some warning signs. We now have open interest on Bitcoin futures hitting all-time highs, and they are now above the peak that we reached in 2021 when we were at 69,000, and above the peak that we reached in April of 2021 when Bitcoin was putting in all-time highs at that point. So even though Bitcoin is at 57,000 roughly, we're at higher open interest levels for futures than the previous two all-time highs, which is always a bit of a warning sign. And we do have funding very aggressive. Right now, longs are paying about 100% annually to keep their long exposure on Bitcoin on Binance, which is normally a sign of a correction in the short term. But of course, like I said earlier, it's almost impossible to call tops on parabolas because the move becomes so aggressive and these consolidations get shorter and shorter until it eventually breaks to the downside, and it's impossible to know where that will end up being. This is a decent resistance level, and it also coincides nicely with the previous consolidation we had over here. So maybe we see a cool off from this point, but it's very hard to know where exactly we're going to top in the short term once the price has gone this vertical and when these people keep aggressively shorting Bitcoin during the rally. So we'll see what ends up happening. We'll definitely keep an eye on the S&P 500 to see if this week is going to end up being a correction or if we're just going to reverse from this point. We do have a narrative going on right now with this potential government shutdown. If they don't make a deal by Friday, there's going to be a partial government shutdown next week, and that could be a catalyst for the S&P 500 struggling, and maybe that puts some downward pressure on Bitcoin. But of course, it's impossible to know that right now, and my portfolio still remains unchanged. Would it be great if I had less USD and more allocation to Bitcoin, Ethereum, and Solana during this rally? Definitely, but This is just how I chose to manage risk, and I don't regret any of my decisions. And I'll deploy the cash a little bit more aggressively once we see Bitcoin start to pull back. But as of right now, I still have not made any changes to my portfolio. Now, speaking of Ethereum, its chart still looks incredibly solid as well. It's just been strong green candle after strong green candle, and it's getting very close to its 618 Fibonacci retracement, slowly trying to catch up to Bitcoin. And Ethereum still has a lot of amazing narratives. We're seeing Coinbase premiums look very good for Ethereum, showing that a lot of the demand is coming from the US. And I do think that's investors front running the ETF. And I've always said that the better these Bitcoin ETFs do, the more excitement and the more FOMO there's going to be for the Ethereum ETFs, because we've already seen the playbook once for Bitcoin. And I think investors are still front running those Ethereum ETFs. And I think that's a big part of why Ethereum has been performing so well. But it also has a big Denkun upgrade on March 13th, I believe, where fees for L2s are going to go down, which should hopefully increase demand for Ethereum block space and increase transactions on the chain and perhaps increase the burn. And we also have a big Ethereum conference this week. These, funny enough, do end up being sell the news events usually. But of course, that's going to rely heavily on what Bitcoin is doing. So if Bitcoin remains very bullish, I don't think this ETH conference will be a sell the news event. But it's just funny that historically, these major conferences end up being sell the news events just because of the excitement leading into them, I guess. As for Solana, still not really doing much. 112 is the resistance to close above, in my opinion. We have not been able to close above 112 even after 2 attempts. It still doesn't look amazing right now, but of course, a close above 112, and we probably see continuation, especially with the strength we've seen from Ethereum and Bitcoin. Solana has been lagging recently because it did so well in the beginning of this rally, but it doesn't look terrible. It just doesn't look amazing until we see a weekly close above 112. And I think Ethereum is dominating the narrative right now because of the upgrade on March 13th. And the conference going on right now. And of course, investors front running the ETF because Solana is not going to have an ETF anytime soon. And everybody is seeing how well the Bitcoin ETFs are doing. And that's driving a lot of attention to Ethereum and taking away some of the attention from Solana. But I still think it outperforms Ethereum and Bitcoin this cycle, which is why it's roughly 9 to 10% of my portfolio. So we'll see what happens. It's definitely easy to get a lot of FOMO and start to feel really bad for having any cash during these aggressive rallies, but there will always be opportunities and pullbacks. And if we somehow see Bitcoin go straight to all-time highs here and we see Bitcoin dominance put in new highs, I'll start buying altcoins aggressively with this cash in anticipation of a lot of FOMO and euphoria entering the market on the Bitcoin all-time high break, because historically you get the best altcoin performance once Bitcoin is above its previous all-time highs, because obviously it's going to take over the mainstream media and the mainstream narrative if we were to see Bitcoin break above those highs. But I'm not really interested in buying any additional exposure right here at resistance, especially after how strong this move has been. Even if we continue higher, I'm still going to manage my risk for now. I'll enjoy this 60% crypto allocation going up in value, but I'm not going to feel too bad about the cash position because I'm sure there will be opportunities to either buy a dip or buy altcoins on a new Bitcoin all-time high. And of course, we're always going to keep an eye on macro. Not much is changing in terms of rate cut expectations. They continue to get pushed back, and now it looks incredibly unlikely that we see any rate cuts in March. And May is starting to look unlikely as well. But of course, May is still far away, so we're going to have to see how that plays out as we get closer. And of course, things don't get bad until after the first rate cut because the Fed is cutting rates due to something breaking. And right now, the market doesn't think anything breaks until June of 2024 based on expectations. But of course, things can always catch the market off guard, and these percentages will change as we get closer to these meetings. But I think consensus is that there won't be any rate cuts in March because you still have inflation remaining stubborn above 3%, and you have the unemployment rate remaining low at 3.7, and you have risk assets like Bitcoin, Ethereum, and other cryptocurrencies, and Nvidia, of course, all absolutely ripping. So I don't think the Fed has a good argument to cut rates with those variables going on right now, which also means the market thinks the economy is strong, and that's why they're not pricing in more rate cuts, because they think the economy can handle these higher rates for longer. And of course, we're seeing that in the strength of risk assets, which have been absolutely ripping recently. So anyway, we'll see what happens. I was definitely wrong about us entering this reaccumulation phase. I really would have loved to see that so we could build another large base over here before moving higher, but the market is excited and getting a bit ahead of itself, so we ended up rallying higher in the short term. And we always said that if the inflows remain strong, price would likely continue to go up, and I was definitely expecting these inflows to slow down and not stay this elevated this far into the ETF launch. So anyway, let me know what you expect. Do you expect us to get above this 786 Fibonacci retracement on the first test, aligning with this previous consolidation over here? Or do we break through it in the short term and potentially put in new all-time highs before the halving? That's very hard for me to believe, but we're getting very close to it, so it's not impossible. But I still expect some consolidation and some cool off after such an insane move the past 5 or 6 weeks. And when you look at the Bitcoin monthly chart, this is almost as long of a rally as we saw in 2020 when we had 6 green months in a row, and we've now seen 6 green months in a row once again, with this recent monthly candle looking absolutely insane. I don't remember the last time we had this strong of a monthly candle on Bitcoin, so things should get very interesting going into the monthly close and going into March. But of course, let me know what you expect. Thank you so much for the support on the recent videos. Thank you so much for watching, and I'll talk to you soon.